Hello and welcome to the Train2Invest YouTube channel. Train2Invest Inc. is a premier investment education corporation teaching families to build wealth by investing directly in the Toronto stock market. For further details on what we do, please visit www.train2invest.com.
Hello, welcome to today's topic. Our topic for this session would be evaluating the performance of the Toronto Stock Exchange for the first 6 months of 2021. The idea behind this purpose is to ensure that the facts that we find as to what caused the TSX to move either up or down, and then see how we can forecast the future in the next 6 to 12 months. The principle being we can look at historical data and then forecast what may happen in the future. Obviously, we won't be 100% accurate, but as we go forward, we can modify it based on new information. For example, in June, as up to June 30th, 2021, inflation was not yet a factor, but beginning the second half of 2021, it probably could. So let's start with the what we call a requirement for the legal side of things, a disclaimer. The information provided is for education purposes only. The information given is not investment advice. Past performance is not a guarantee of future results. Train2Invest is not a broker or investment dealer or an investment firm, etc., etc., etc. Now that we got that out of the way, let's start looking at certain things. Right, here's the background. What caused the cause of the global pandemic in 2020 and that caused such chaos in the global economy? We begin with the thought that the coronavirus, which is really being used as a biological weapon by many countries, then the idea here being they're not going to use it. They're going to use it as a defense mechanism. For example, nuclear. The Russians have nuclear weapons, so the Americans have nuclear weapons. The idea being that since we are both could destroy our countries, we will not use them. That's the principle. And this seems to be what's happening in the biological germ warfare systems as well. And so we need to keep an eye on that. We can't do much about that, but we certainly have to keep an eye on these type of things. So we go to Wuhan, China. The Chinese government lied about the contagiousness of the lab-created disease. Now there's lots of argument between whether it was created by a lab or whether it was from a bat and so on and so forth, but the evidence seems to be pointing towards the lab-created disease. Chinese scientists who were working on a disease lab in Manitoba, Canada, were booted out of the country, and we still haven't heard or got a reason as to why they were sent off. And so we are waiting for that kind of information to come. The WHO, or the World Health Organization, has been pro-Chinese for so long, and they continued to say, at least for a long time, that it was not a lab-created disease, but rather a disease that came from bats or dogs or whatever it was. But evidence today shows a little bit more strong leanings towards the lab creation. Dr. Fauci and the US government have been funding the Wuhan lab. And here's where the question has to arise as to what was the plan behind that. And that we may or may not know, but eventually some answers will come. Unrestricted travel was the basic cause of the spreading of the pandemic across the globe. China refused to inform the world that this is contagious disease, and so they allowed people to travel out of Wuhan to Japan, to the US, to Athens, Italy, and so on and so forth. And that caused a tremendous spreading of the disease. And as of July 2021, we hear that 4 million deaths can be attributed to the coronavirus. 19 or COVID-19. However, that figure may not be accurate, as many third world countries do not report that information. Also, we have from the World Health Organization 187 million confirmed cases of COVID-19. So all of these play a major role in the economies of various countries. So what is the result of the global pandemic? As soon as the disease hit the global, on a global scale, we had quarantines of factories, quarantines of buildings, even quarantines in housing. And then there were travel restrictions on trucks, cars, and ships, and planes. So what the end result was that factories closed, no goods were produced, and there were massive layoffs on a global scale. Unemployed people around the world, and even in Canada, massive unemployment from factories and companies. They tried to have people work from home, but there was this word, recession, that seemed to be hounding the people. Now, let's get to the place where we talk about the impact of the global pandemic. If you look at the screen, you will see services cancelled, hotels and concerts, sports and entertainment, cruises and holidays, schools and colleges and universities were shut down. Obviously, production on a global scale was shut down, supply chains were cancelled, and no goods produced. All of this caused fear, a fear that was not only in the economy and the population, but also in the market. So global equity sell-off took place. Many people started selling their stocks and shares in companies around the world, and the question what they raised was, how can companies be profitable if they cannot produce items? And that's a very good point, but the sell-off was great. So let us take an example that from the TSX itself. When the TSX sold off, we took one sector as an example for you, global travel restrictions. There was no shipping. I mean, we're not talking about cruises. We're talking about big tankers that bring goods across the world. Planes were stopped, so you couldn't have international travel. And of course, trucks were not allowed to move anywhere. So there's two parts to this equation. One, as you see the number one there were declines in oil prices. Demand for oil was not there, and that caused a crude oil price war. OPEC Plus, which includes Russia, Saudi Arabia, and its allies, versus the U.S. shale oil producers. When the ex-President Donald Trump opened the federal lands and allowed shale production of oil, America was the number one oil producer. So there was a battle for oil prices, and that resulted on impact on individuals' earnings. They were laid off. Many, many people were laid off, and they had to be bailed out by the unemployment insurance, EI. On the other side, we had energy stocks sell-off. People started selling their stocks. So we had the impact on the individual was that his RSP and TFSA lost value. Okay, let's look at a challenge. On February the 26th, 2020, the TSX fell from 17,933 to 17,042, almost a 891 points decline. Okay, see, from February 19th, 17,933 and 26, 17,042, almost 900. How would you react? I mean, if you looked at your RSP in January and then you looked at it again on February the 26th, you would see a drastic drop in the value of your shares. All right, what did we do? TRAIN2INVEST issued a email after the 900-point drop on February the 26th, It says market update sell-off. As per attached analysis, the major cause of the sell-off is due to the China coronavirus that seemed to have a global impact. However, it is our opinion that this sell-off cannot be sustained in the long term. Suggestion: hold. The companies that we have acquired are all TSX solid names and therefore form the backbone of the Canadian economy. We will continue to monitor the situation and provide updates as deemed necessary. If you have any questions, send an email. Now, we were providing direction during the storm, and that is the very important thing to do, because we cannot have knee-jerk reactions on our investments. So how huge was the sell-off? Now let's look at this chart here. On February the 12th, 2020, 17,970 was the record of the TSX there. Then on March the 23rd, it was 11,172. So there was, in 40 days, it dropped 38%, almost 7,000 points. Now, what does this mean? What does 38% mean to you and me? It doesn't really immediately register. So let's say you have 50,000 in your RSP account. What is 38% of 50,000? It'll be 19,000. So in one day, not in one day, in one time frame, in a very short time frame, your value of your RSP moved from $50,000 to $31,000. This is a huge impact on your retirement goals. Now think about this. How are you going to find $20,000 in the next little while to make up for the ones that you lost? Can you increase your salary? Probably not. Can you increase your business profits? Probably not in the short term. So we have to think about those things. Protecting our capital is very important. All right, now let's look at a 2-year chart. Now, if you don't know what this chart means, don't worry about it. Just look at what's happening there. All right, on March the 23rd, it was 11,173. Okay, and people were panicking. 38% loss. Now watch it move back all the way to February 2021. Remember, February 12th, it came down in March. February 21, the recovery was already there. It had already reached the previous level of about 18,000 points. Okay, so that was in a short time frame from April 20 to March, about a year. Okay, it came back. Now let's look at the 6-month chart that we are actually looking at. That's the reason for this topic. And you see within the 6-month time frame, let me put it, within the 6-month time frame, you will see that the stock market itself increased by 15% or 2,700 points from 17,500 to 2,200. Okay, that's how the market itself moved. Now, let's take Royal Bank as an example. Okay, let's look at Royal Bank. Let's look at Royal Bank and see how it's performing in this particular time frame. Here we have, as it moved from around $105 to $125, $25 increase, approximately 19%. You also picked up a dividend of $1.08. And that's an amazing thing to have, right? Because dividends increase in value. Now look at Enbridge, pretty much the same. It had moved from about $43 to about $50, a $7 increase in 6 months, or 16%. It also paid dividends during the time frame of 84 cents twice. So what does this mean? This means that the companies that, when we looked at the bank and now an energy company, all of these were moving in the right direction. What is the danger? It's called F.O.M.O. Here you see the headlines, and July the 2nd, TSX Composite hits record high to start July. July 2021, the market was deemed to move higher. What is F.O.M.O? Fear of missing out. One of the greatest challenges in investing and trading is to read a situation where there is no track record, that is, following a path without a map. The TSX has reached record levels. So what do? Cease trading? Definitely not. While caution is necessary, we cannot live in fear. Proper analysis based on facts, not emotion, will provide answers to which sectors will be profitable. This is a learnable trait. But what destroys a portfolio is the F.O.M.O effect, a desire to chase rabbits without thorough analysis. The fear of missing out, chasing stocks with a mindset, my money must be working. The answer is patience. We need to wait for a pullback. Now, one of the ways to examine which sectors are performing, you can compare them with the various sectors to the TSX. Okay, here you have a number of sectors, and you see some are above, some are below. We have to find the reasons where they are. All right, the battle really is between the COVID shutdown and economic growth. Whenever you shut down the economy, economic growth is stifled. And when economic growth is stifled, the market tends to be sell-off position. Right? People don't want to keep stocks of companies that may not be functioning. So in our next video, we will talk about what the impact will be on the TSX.
Thank you for visiting our channel. If you want to know more about building wealth, please click on the subscribe button. For further details on what we do, please visit www.train2invest.com.